Hey, this is Justin with DayTradeTheMarkets.com, and wanted to look at the emini S&P today. I've got the chart here from about 11:15 to about 3 o'clock Eastern, and I just wanted to look at a concept of how you can tell if a market is likely to remain in a consolidation or a choppy type of a market, or if it's likely to break out. In other words, I can tell if a test of a high or low is likely to fail and reverse, or if it's actually going to break out and become more of a vertical move. And today's a good example of that because very tight range, very slow day, and so knowing how to handle these types of days is very important. So what I've done, I've kind of zeroed in on the like I said, between about 11:30 and about 3 o'clock Eastern time, and right here, as you can see, is the prior low of the day. So we had a low of the day made earlier in the day, and up here is a high of the day that was made earlier. So we always, whenever we're near highs or low of the day, we obviously want to be paying very close attention. And so you can see here we had some selling that came in with this high velocity move, but then when we tested the low of the day, we only made a new low by one tick right away. And you could see that it was made with a gray bar or non-aggression bar. Okay, so that's our first initial clue that this is not looking like a very strong test lower. If this was a powerful move lower, we would expect either a level 2 or a level 3 selling aggression on this bar on this low of the day, which then has some follow through. That would be what we would expect if this thing's likely to continue lower. And the fact that we're in a bigger picture up auction means that we're kind of looking for potential failure. And the fact that we had a one tick new low was not a selling aggression bar. And then within about 5 or 10 minutes, we started to get some really good buying, some extreme buying that came in, and then some strong buying, some strong buying, some extreme buying. You could see we tested the low basically within a tick of the low of these level 3 bars both times. But again, bigger picture up auction, a failure to move lower, and we see that because it did not attract more selling aggression. If this thing was going to break out, it would definitely attract more selling aggression, and you would see that. Okay, we have a lot of videos where the market does break out, and when it does so, it almost always breaks out hard on a level 3 selling aggression bar on the low of the day, or a level 3 buying aggression bar on the high of the day. That's a very good clue as to when a market is likely to break out versus when it's likely to fail. Now, if we look at what happened on the high of the day, now again, heading into this high of the day, we'd failed on the low of the day. Our bigger picture bias is up, so I would say it's more likely we're going to break out higher at this point, but we still want to watch that. We don't just want to make that assumption. You don't want to get caught kind of with your hand in the cookie jar if it's not a true breakout, if there's really nothing there. So again, upon the high of the day, we ask ourselves, is this attracting more buying? And in this case, you can see it's a gray bar. If this was really attracting more buying, we would see at least a level 2 bar and more likely a level 3 buying aggression bar. But that's not what happened. We meandered in that, 3-tick range for about 15-20 minutes, and we actually saw some selling come into the market. Again, it doesn't mean you're going to necessarily want to hop on that. It's pretty aggressive, but at least you can avoid taking kind of some of these false breakouts, these head fakes, if you will. So again, I thought this was a kind of an interesting day to look at that, a slow day, but it's an important idea. When we do test the high or low of the day, how do you know if a breakout is likely or if it is likely to fail and then reverse? So hopefully that makes sense. Let us know if you have any questions on that. We'll talk soon.